Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Midea Real Estate Holding Limited Annual Report. Midea Real Estate Holding Limited offers a diverse range of businesses and services. At its core, the company provides property management services within the People's Republic of China. This includes overseeing commercial properties and industrial parks, which are integral to the country's economic growth. In addition to property management, Midea also engages in asset operations, encompassing various sectors such as real estate technology and project management services. These services aim to optimize the efficiency and productivity of its assets, ensuring they remain competitive in the market. The company's extensive portfolio is a testament to its commitment to innovation and growth. With its headquarters in Foshan, Midea Real Estate Holding Limited continues to expand its reach, driven by its parent company, Midea Development Holding BVI Limited. Midea Real Estate Holding Limited market capitalization of $5 billion is materially smaller than most of its industry peers of roughly $17 billion. Midea Real Estate Holding Limited trades at a lower price-to-earnings ratio of 8 times and a higher price-to-book ratio of 0.89 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Midea Real Estate Holding Limited itself. The company maintains a moderate leverage profile, with liabilities making up 48% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 4.41%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified from the extracted summaries. On the growth side, project management services have seen a significant increase of plus 227.1%, while property management services have experienced a modest plus 3.5% rise. The asset operation business has also shown substantial growth, with a total segment revenue of plus 844,277. Furthermore, the real estate technology business has secured contracts totaling RMB 457 million within the year. On the decline side, the asset operation and real estate technology businesses have seen decreases of minus 15.4% and minus 25.4%, respectively. Additionally, there has been a significant decrease in other income and losses, with a net loss of 164.9%. Industry-level drivers of revenue growth include industry stabilization and recovery, as well as a shift towards quality assets in core cities. The polarization between core and third/fourth-tier cities is also contributing to revenue growth. Furthermore, the focus on good house, concept, and service quality has driven growth, as has the consolidation of synergistic development across 4 core businesses. The net income of the company experienced a significant increase, rising by 16.9% from RMB 478.4 million to RMB 559.3 million. This growth was even more pronounced in core net profit, which surged by 19.3% from RMB 503.85 million to RMB 601.04 million. However, despite this upward trend in profits, the company's profit margins actually declined. Specifically, they decreased by 2.8 percentage points, dropping from 35.7% to 32.9%. This seeming contradiction can be attributed to various factors, including changes in production costs, market conditions, and pricing strategies. The company's debt level and interest expenses have undergone significant changes. On the one hand, the non-current bank and other borrowings have been completely repaid, decreasing from RMB 586,580 to RMB 0. However, this has been offset by a substantial increase in current bank and other borrowings, rising from RMB 48,803 to RMB 591,920. In terms of interest expenses, the company has experienced a notable decrease. Interest expenses have dropped from RMB 138,388 in 2024 to RMB 10,618 in 2025, while finance costs have also decreased significantly, falling from RMB 143,302 in 2024 to RMB 13,377 in 2025. These changes suggest that the company has made efforts to manage its debt and reduce its interest expenses. The company's performance can be analyzed through its various segments and regions. On the positive side, the property management services business saw a significant increase in revenue from $1,839,217 to $1,903,943. This growth is a testament to the company's ability to manage properties efficiently and effectively. Another segment that performed well was the asset operation business, which reported revenue of $834,977 with an operating profit of $312,208. This indicates that the company's assets are being utilized optimally, generating substantial profits. However, not all segments fared equally well. The project management services business experienced a decline in revenue from $292,915 to $957,980, indicating a decrease in demand for its services. Furthermore, this segment reported an operating loss, which is a cause for concern. The real estate technology business also struggled, with an operating loss of $110,445. This suggests that the company's investment in technology may not be yielding the desired results, at least not yet. Overall, while some segments performed well, others require attention and improvement to ensure the company's continued growth and success. Management's outlook for the company appears to be cautiously optimistic. They are actively monitoring and mitigating potential risks, specifically foreign exchange risk, which suggests they are proactive in managing external factors that could affect their operations. In terms of liabilities, management is confident that any potential costs associated with ongoing legal proceedings will not have a significant impact on the business. This confidence indicates that management has a clear understanding of the company's financial situation and is able to navigate complex issues without undue concern for their bottom line. The company has a history of paying dividends to its shareholders. In 2025, the company proposed final dividends of $0.19 per share, an interim dividend of $0.15 per share. This is consistent with the company's practice in 2024, where it also paid dividends. Specifically, the company made 2 dividend payments in 2025. The first payment was made in August 2025 for a total of $0.27 per share. The second payment was made in December 2025 for a total of $0.15 per share. That concludes the financial summary for Midea Real Estate Holding Limited. Feel free to comment below, and I will be happy to answer them when possible.